In geopolitics right now, the most favorite buzzword right now is de-dollarization. If you come to YouTube, for example, or your favorite place, social platform where you consume your news, you'll often see collapse has begun. US Treasuries are dumping. What happens? First stage of dollar collapse. Afraid of de-dollarization. You see all these, all these total collapse, dollar in danger, end of the dollar. All these news that you see here, we could go on and on. I believe you get the idea. One thing I always like to emphasize is that it's always very important to verify whatever news that we get. It's always very important for us to truly understand what we're getting ourselves in. What times are we in right now? So I'd like us to look at all these de-dollarization theses. Where do we stand and what truth or fiction is involved in all of this? So let's get right into this. And who else can we use to kickstart all of this than at the World Economic Forum led by Larry Fink himself? So let's quickly tune in. Hopefully you can hear what he's saying. Then we'll get right back to the session. So let's kickstart by this short 2-minute audio that he's about to say. So this is Larry Fink talking at the World Economic Forum.
But I would say, getting back to technology for a second, I think the movement towards tokenization, decimalization is necessary. It's ironic that we see two emerging countries leading the world in decimalization, in the tokenization and digitization of their currency. That's Brazil and India. I think we need to move very rapidly to doing that. We would be reducing fees. We would do more democratization by reducing more fees if we had all investments on a tokenized platform, that you could move from a tokenized money market fund to equities and bonds and back and forth. We have one common blockchain. We will, we can reduce corruption. So I would argue that yes, we have more dependencies on maybe one blockchain, which we could all talk about. But that being said, the activities are probably processed and more secure than ever before.
We're going to go over time.
So I hope you were able to hear the audio and what Larry Fink was talking about. And if not, let's just break it down again. This is basically in a nutshell what he was saying. He was talking about how the entire financial system should be on one, not multiple, not two, not three, but one common blockchain. That's what he just said. That's the takeaway. He's talking about how tokenization is the future of finance and how the entire financial system, the financial markets are getting ready to be tokenized, and all of that should take place on one common blockchain. Yes, it might be debatable. However, one thing for sure, that one blockchain will process transactions and is secure. So let me ask you, which blockchain right now, layer one blockchain, is a smart contract blockchain, is leading in terms of majority of real world assets, stablecoins, and also since its 10-year deployment, it has not stopped functioning or validating blocks. We all can agree that we are talking about one particular blockchain, and that's Ethereum. So I want us to understand one thing as well. One thing I want us to really take away from this is the core underlying software of the global financial system runs on the current underlying global financial system is between 40 to 60 years old. That's how old it is. And because of this, it's clunky, slow, and depends on costly intermediaries. Updating it to blockchain-based system could make those pioneering the change a lot of money. And BlackRock isn't even the only one bullish on blockchain. Blockchain is the future of traditional banking, said the CEO of UBS. We'll get to what UBS is and what UBS relies on. They say blockchain is the future of traditional banking. Which blockchain? Which blockchain? We'll see it. So this is the takeaway that I want us to really understand. It's an old traditional financial system is old. Its underlying software, it's extremely old, between 40 to 60 years. And it's clunky, slow, and depends on costly intermediaries. Not only Larry Fink is there, but is bullish about it, but the CEO of UBS. We'll see what UBS is, the largest Swiss bank and asset manager. Also, this blockchain, updating the traditional financial market onto the blockchain-based system could make those who pioneer it a lot of money. So they're not here just for the technology, but of course they're here to make a lot of money. So if you're part of the pioneering crew, using this technology to its fullest, you're going to make a lot of money. So let's keep this in mind. Keep in mind, we're talking about, we are trying to analyze de-dollarization. How is de-dollarization relevant, or is that even true? Is the dollar really being de-dollarized in this new digital economy that we're about to enter in? Keep that in mind. So now let's continue. I'd like us to look at this. Of course, the blockchain they're talking about is Ethereum. Ethereum is gaining backing from the world's largest asset manager, right? We just had Larry Fink at Davos, BlackRock, and CEO Larry Fink framed blockchain-based finance as a way to cut costs and improve efficiency. And new BlackRock research shows Ethereum already underpins more than 65% of tokenized assets globally. So this is exactly what he was talking about. This is what he was trying to say. So what he's talking about is investments to be tokenized, financial assets to be tokenized on a platform, one platform. We could move from a tokenized money market fund to equities, which are stocks, bonds, and back and forth. All that can only happen if you're using one platform, one particular platform, one blockchain. That's the whole idea. So like we say, UBS is also in it. It's not just BlackRock. So spearheaded by UBS, 3 banks in total, 3 Swiss banks, UBS, Post Finance, and Signal. UBS is the largest asset manager and bank 2-in-1 in Switzerland. In Europe, Post Finance is a government-led bank that is currently offering Ethereum staking as a service. And you can stake with them as well. And what do they do? So they have completed a tokenized deposit trial under the umbrella of the Swiss Bankers Association. So these are the 3 leading banks, but they did this on behalf, because they're the largest banks in Switzerland, these 3. So they're doing all of this under the umbrella of the Swiss Bankers Association. They represent the Swiss Bankers Association. So the proof of work, proof of concept was conducted, so it works. And where did they do that proof of concept? On the public blockchain, Ethereum blockchain. So not only is the largest asset manager, BlackRock, on Ethereum, talking about one blockchain, which is Ethereum that he's talking about, but UBS and the whole Swiss Bankers Association are also run a successful tokenized deposit trial on behalf of the Swiss Bankers Association. We've talked about this many times. They have a proof of concept now, and they ran that not on Cardano, not on Solana, not on Binance, but they ran all of that right on the Ethereum blockchain. So one thing that I want us to hear as well is that this is not like based on opinion. This is not about opinion or favoritism or none of that. So here is a former BlackRock's head of crypto, head of digital asset, and Joseph Chalom. And he's the man behind the BIDL token, which is the tokenized money market fund. He's behind the all the success of the ETFs of Bitcoin. and all of that. So before he left BlackRock, those were the things he worked on. He was the head at that. Now he left and is currently working on his own project for Ethereum right now. And let's hear what he's talking about based on Ethereum. Let's hear what he has to say.
You speak on in various different outlets. From your perspective, Ethereum is the chain that's going to power Wall Street. Talk to me a little bit about that competition. Is there room for both? And if not, what makes Ethereum the better chain?
Sure. I won't share my perspectives. Maybe I'll just share facts. So the fact is that Ethereum has been around for 10 years. It's the secure, trusted, and liquid ecosystem. And I talk about both the layer one mainnet as well as the long set of layer twos who help do that roll-up strategy. Solana has been fast and cheap, but it has not been secure. It has had downtime. And I think what you're going to end up seeing, and you're seeing it now, is the real institutions who care only about three things: trust, security, and liquidity. They're building on Ethereum for high value projects where you're talking about moving money, tokenizing assets, representing ownership. It's happening on Ethereum. More than 65% of stablecoins and tokenized assets are happening there. 10x what you see on Solana. I do think there's a role for cheap, fast, less secure chains. And I think Solana will win in the meme coin, maybe the gaming space, where actually security matters a lot less and speed matters more. So it's not my perspective, it's what you're seeing in the industry. Ethereum leads in high quality assets. Indeed.
I'm here.
So I believe that we understand what the topic is, and I hope that we understood what he was saying. So he literally said, this is not about opinion or perspective. These are facts. So he mentioned the facts. He highlighted the facts. The facts that Ethereum is the layer that is based on liquidity, volume, and security. And this is exactly what institutions want. They're bringing hundreds of trillions of dollars on chain, and they want, the priority is not fast and cheap. The priority is secure and durable. And that's exactly what it's about. And also Ethereum has the network effect. Like, why are you on Facebook or Instagram or TikTok? Because your friends are on there, right? So that's the same thing. Like, you see more people using Ethereum, more and more developers, more users are on Ethereum. It's that network effect. The more people are coming. So you go where the liquidity is, you go where the development is happening, and you go where the blockchain is secure. And again, we saw Larry Fink talk about it in Davos. We know that tokenization is the future. We know that the traditional financial system is 40 to 60 years old. It needs an upgrade, a new software upgrade. Guess what? Blockchain technology is a software. It's a technology. It is the new system. It is the new layer where finance is being built on. And that's exactly what we're looking at. So now that we have that behind us, now keep in mind, we're still trying to debunk that there is no de-dollarization. Of course there is. We can't act like there is. It's not happening. People are not losing faith in the dollar and all of that. However, we're trying to make a point that actually will make us look at everything differently. Instead of just reading the headlines of de-dollarization, we look at the whole system, the whole situation with different eyes. So let's start right here. I want us to first of all start from the very beginning. The technology is the internet. Let's start at its origin. Who originated the internet as we know it today? I know most of us already know this, but for the sake of the topic today, let's just go through it. So the US government initiated the internet. So for those who have not known this before, now you know. The internet that everybody's using, the whole world is depending on right now, was initiated by the US government through the Department of Defense. Advanced Research Project Agency Network, also known as ARPANET. This was back in the late 60s. This was 30 years before the internet became even mainstream and publicly accessible to you and I, right, to the retailer. So this was to create resilient communication system, right? And it pioneered packet switching. I don't want to be too technical here. The takeaway that I want us to have here is that it's the US government that initiated this technology we know today as the internet. It was done back in the 60s. It was done through the Department of Defense. And it was in the early 60s. This is the takeaway. Also, what I want us to take away here is that it was expanded by National Science Foundation to link. It was actually exclusively for academics, research, and the military, before transitioning to a commercial network in the early 90s. So before it was commercialized for everyone, mainstream, before it went mainstream, it was strictly limited to academics, to the military, and to research. So now that we know that, let's take it a step further. What point are we trying to make here? So for us to have a better idea and really just get the concept and understand how important, what relevant the internet has with us, we'll go a step further and ask ourselves this question: what comes after the internet? But before we get to this and answer this question, let's understand the impact that the internet has on us to this day. So the internet, as we know it, has revolutionized every corner of modern life. Not most, not some, every. You and I know that. Every corner of modern life. So from how we communicate, work, learn, how we entertain ourselves, the internet has transformed the world, right? And again, we'll answer this question later. What comes next? So for now, technology does not stand still, as we know. And there's a growing sense that the internet, or at least at its current form, may soon be eclipsed by innovations. Here we are talking about these innovations right now. These are the topics at the World Economic Forum. We have the technology right now out here, and this is exactly what we're talking about. So from immersive experiences to decentralized networks, here's what experts predict, right? So there's many of them, but the one that is going to literally upgrade the entire financial system, like we saw UBS saying it, BlackRock saying it, the World Economic Forum saying it, is this right here: decentralization and blockchain technology. This is exactly what we had right now, because the current internet largely is centralized. The internet as we know it is centralized, and big companies like Google, Facebook, Amazon, even Microsoft hold vast amounts of data and control much of online infrastructure. But there's a growing push towards decentralized, driven blockchain technology. This will allow peer-to-peer networks. So from me to you, without intermediary, self-custody, autonomy, access. Everyone has access to it, no matter where geography is, and permissionless. That's the most important. Nobody can sanction you, block you out of it. You have access to it. So it works that don't rely on central authority, right? So peer-to-peer networks that don't rely on central authority. So what does this mean? It means more power in the hands of you and I, of users, greater privacy, and less dependence on tech giants. So, and of course, we're already seeing all of this taking place. So this is the point that we're trying to make, community. This is the point that we're trying to make. And another thing that I want us to understand here is that the future beyond the internet doesn't suggest replacing it. Let's not get this, misunderstand this. It's not about replacing the internet, because the blockchain doesn't work without the internet. If we're offline, there is no blockchain, right? So you need to stay online. We need to stay online for the blockchain to work. It's more an evolution, right? It's a progress. It's a progress. So the post-internet world will be radically different, and it's arriving sooner than we think, right? So in the end, the internet may not disappear entirely, but will likely become one part of a larger, more integrated digital ecosystem. And how we interact with it, however, may change. It may change forever, right? It will change how we're interacting with it right now. It will change our world just the same way it changed, the internet changed us, right? So what comes next is what we just answered. Decentralization, blockchain technology, not just for the financial infrastructure and upgrading and updating the old software that is between 40 to 60 years old, but it's also for us to use on a daily basis. So now that we understand the origin of the internet, who initiated it was the US government, right? The Department of Defense. Now, let's ask ourselves the same question. Who initiated cryptography and the technologies used right now on blockchain? Surprise, surprise, it's the US government. US government has initiated, standardized, and promoted several key cryptographic technologies, right? And one of them, very famous, is the AES. AES is what's being used currently within the blockchain. And this is one of the keys that is happening. But I want us to really look at something in particular here. So there is something known as SHA. So other contributions, of course, development of hash algorithm. This hash algorithm and initiatives to standardize digital signatures. So what is a hash algorithm? Who's using hash algorithm right now? So first of all, I want us to clarify what is AES. AES stands for Advanced Encryption Standard, and encryption and blockchain technology are combined to ensure data confidentiality, integrity, and privacy, particularly for storing sensitive off-chain data. So AES is, let's look at that. Let's differentiate what they are. So AES is literally for encrypting. Encrypting means securing, making safeguard your data. Because what used to happen is before, you can't write all of this. You can't put all of this on the blockchain. It's not efficient. All of the data, you can't put it on the blockchain. So before it's on the blockchain, you compress it and you actually encrypt it so nobody can fully read it. And that's when the blockchain now comes in. Now, the blockchain is now used to for your public key. It's like your account, right? Your account. And it's just as a form of identifying you and to know that you are the owner, right? And it provides immutability. Immutability means that nobody can, like we was talking about it, it's unimmutable. Nobody can stop you or keep you away from it. You can use it. Nobody can stop you from using a decentralized platform. You can't be sanctioned or is kept away from it. It's an open public blockchain. So these two work together. I just wanted to stress that, right? So, but what I want to highlight here also is that something in particular. So Bitcoin extensively uses this SHA, like this hash technology. It's known as SHA or SHA-256. And this function, is a cryptographic hash function, and it's a foundational component in its technology. It is primarily utilized in the proof of work mining process, hashing, and address generation. So Bitcoin is using this particular technology on cryptography. Now, what I want us to understand also further is that Bitcoin utilizes, like we said, the SHA-256, the secure hash algorithm, right? Cryptographic hash function. Who originated it? Originally designed by who? By the US National Security Agency, by the NSA. NSA is a subdivision within the US Department of Defense. So this same function that Bitcoin is relying on, and its foundational cryptography is this SHA-256, was originally designed by the US Department of Defense, specifically the NSA. So this standard secures the Bitcoin network by creating so and so and so. I'm not going to bore you with the detail, but what the takeaway here is that it's originated and designed by the NSA, the US Department of Defense, just like the internet was. And I want us to keep that in mind. I really want us to keep that in mind. And if we're talking about the US government, primarily NSA, they're the ones that have been driving these critical cryptographic standards, like we say, the AES and others, right, as well, like we just saw here. And I want us to understand what the NSA really is, right? What is the NSA? Just for us to really understand and be able to differentiate. So the NSA stands for National Security Agency, and it's a specialized intelligence agency focused on signals, intelligence, and cyber security. So, but however, it's operating under the Department of Defense, right? So while the Department of Defense manages the entire US military, Army, Navy, and all of that, the NSA acts as a combat support agency focusing on gathering foreign intelligence and securing US communication systems. Nonetheless, it's all operating under the Department of Defense. So if you see NSA, that means that, let's go back here. So if we read here that what the technology that Bitcoin is using was originated and designed by the NSA, now you know what that means. That means that it was originated and deployed by and designed by the Department of Defense, the US government, basically. That's where we're going to stop. And that's a whole different topic on its own. But for now, this is really what I want us to understand. And before we really get out of this topic, I just want to make something clear. Ethereum is not using SHA-256. Ethereum is primarily using Keccak-256, and not right here, not the standard SHA-256 used by Bitcoin. I really just want to make that clear. And I also want to let us know here that while sometimes confused, they're distinct, right? They're really different. While sometimes confused, Keccak-256 is different from SHA-256 that Bitcoin is using. It was chosen by the Ethereum Foundation for its specific security properties. So, right here. So while SHA-256 is widely used in other older blockchain networks, Ethereum's adoption of Keccak-256 provides a distinct, robust layer of security, tailored. Tailored means customized specifically for Ethereum, for the Ethereum platform. So it's customized for it. It's completely using something else. So now that we understand that, I just wanted to really bring that home. I really wanted us to understand that. And one thing I want us to also understand here, community, is this. This is what I want us to know next. Let's bring it here. So this is what comes next. So how has technology changed and changed us in the past 20 years? Actually, this article is more than 5 years old. So it's actually more than 25 years. So how has technology changed and changed us in the past 25 years? We should ask ourselves. And this is a very important article. So since the dot-com bubble, community, since the dot-com bubble burst back in 2000, technology has radically transformed our society, like we just saw, and our daily lives. From smartphones to social media and healthcare, the technology has literally revolutionized. So just over 25 years now ago, the dot-com bubble burst, causing stocks of many tech firms to tumble. Some companies like Amazon, like we see them today, quickly recovered their value, but many others were left in ruins. In 25 years, 2.5 decades, since this crash, technology has advanced in many ways. And this is now where I really want us to understand this. I want us to really look at this. So this broadband expansion was certainly not just an American phenomenon, but similar growth can be seen on a global scale. So in the year 2000, there were less than 7% of the world was online. Can you imagine that? 25 years ago, there were less than 7% people in the world online, meaning having access to the internet. Today, over more than half of the global population has access to the internet. But in the year 2000, just 25 years ago, less than 7% of the individuals were online. I really want us to keep that number in mind. It's less than 7%. So similar trends can be seen with cell phones as well. So even cell phones, at the start of the year 2000, there were only 750 cell phone subscriptions worldwide. This is the whole world. 740 million cell phones. Now, 25 years later, that number surpasses 8 billion, meaning there's even more cell phones than humans. So this is something that I really want us to keep in mind. So within 25 years, a lot has changed. For the technology, the internet, less than 7% of the world population was online. And there was only 740 million cell phone subscriptions. Now, I want us to draw similarities. Fast forward today. As of early 2025, approximately, does this number sound familiar? 6.8 to 7% of the global population either owns or uses cryptocurrencies. Didn't we just read something very, very familiar? We're at the exact moment, community, where we were 25 years ago with the internet. And now it's not the internet. Now it's the blockchain. And the entire financial system is getting ready to be built on top of the evolution of the internet. Back then, if you knew what you know today, and you were taken back 25 years ago, and you were able to invest in the internet, obviously you can't. Internet is just a technology, that's it. But let's say you were able to invest in it. Won't you do that? So we don't have to speak figuratively. We don't have to have wishful thinking. Here we are today. Now you are able to invest, participate, be part of this new evolution of the internet. Everybody's pointing towards it. Everybody's talking about it. Yes, everything openly said he's talking about one blockchain. Everything should come under one umbrella, one blockchain. Everybody agrees, including the Swiss Bankers Association led by UBS, Signum, and Post Finance. They use that under the umbrella of Swiss Bankers Association. They're using Ethereum blockchain for that. JP Morgan is using Ethereum. The entire infrastructure for payment system, Visa, MasterCard, they're using Ethereum. We could go on and on. You get the idea. The point is that we are at the exact same place. 7% of the global population either owns or uses cryptocurrency. 93% of the world is still in the dark in regards to using or owning cryptocurrencies. That's how early we are in this industry, and the adoption is heavily concentrated in Asia, growing in Latin America, but it's only driven by remittance. Remittance is money sending, because they need the US dollar stablecoin to protect the inflation, to protect themselves from inflation, rather than just investment. So we are at the exact same crossroad like we were in the year 2000. Now, with the knowledge that we know of how the internet changed the world, from how we entertain ourselves, how we communicate, how we invest, our whole life depends on the internet. Now you're put in the same seat, and it all starts all over again. And you see that this time, Ethereum is not just the internet of the future, the technology where the software that the traditional financial world, financial system is going to be built on top. but it's also an asset that you can literally invest in, build upon, adopt. What are you going to do with that knowledge? I will leave us to that. This is the point I was just trying to drive home. These are the parallels I was just trying to make. And when you hear about, oh, de-dollarization, all of these things happening, I want us to always keep this in mind right here. This next one, this is what I really want us to understand. Now that we understand that blockchain technology is already in place, we know that the entire financial system is getting ready to be upgraded and updated, and there's only one chain in mind. These are not my words. These are the words of Larry Fink. Now, US dollar denominated stablecoins. First of all, what is the number one super application right now? What is the number one cryptocurrency that is most used on the blockchain? They're stablecoins. Now, these stablecoins, what is the currency that is literally dominating stablecoins? It's the US dollar. US dollar denominated stablecoins dominate the blockchain industry. They account for 99% of the total stablecoin market. I really need us to understand this. So if you hear noise like, oh, de-dollarization is happening, the dollar is collapsing, the end of the US, all that, it's noise. We are at the very beginning of a whole new era, a digital era. And just like it was after World War II in 1944, after World War II, the US emerged as the country with the most gold reserve, global gold reserve. Here we are again, the largest and latest technology that is going to revolutionize and update the existing clogged up, slow, inefficient financial system. 99% of the stable coins are US denominated. So they're already dominating the new technology, the new industry that finance is getting ready to be built on, and only less than 7% of the global population has adopted. That's how early we are in it. But yet they're already dominating 99%. What about the remaining 1%? The remaining 1% consists of 4 different currencies: the euro, the pound, Singapore dollar, and Japanese yen. Can you imagine? 4 other currencies are splitting the 1%. 99% goes to US pegged stablecoins. Now you're talking about de-dollarization. We're talking about tokenizing all financial assets in the world. Let's look at this even closer. Right now, the latest news today is that Fidelity Investments, they're starting their own stablecoin, and they're going all in and betting in the future of banking, that the future of banking is on what? It's on blockchain. I wonder which blockchain. They are running on Ethereum. I'm sure we're starting to hear the same thing all over again. What is Fidelity Investments? What is Fidelity? Let's look at what Fidelity is. Fidelity is an asset manager. And if we look at the world's largest money managers, asset managers, let's look at the list. Number 1, obviously, BlackRock. We all know BlackRock. Number 2, just closely behind is Vanguard. Now, this is where does Fidelity fits in. They're the 3rd largest asset managers in the world. And since we are here, you see that the top 6 asset managers, the largest asset managers, the top 6 are all in the US. All of these individual institutions are getting ready to tokenize these assets in the trillions, tens of trillions of dollars, and place them on Ethereum so that they can get traded. Assets such as stablecoins, and these will need to be paired with a stablecoin. And 99% of the stablecoins are US denominated. So that means that these assets, once tokenized, commodities, real estate, bonds, will predominantly be paired with the US dollar stablecoin. And once This will bring global demand for the US denominated stablecoin. That will bring demand for the US bonds. And demand for US bonds will bring down US interest rates. And lowering interest rates will mean lower mortgages, lower credit cards payment, lower car notes, and easier and cheaper access to money. So we see how this is all taking shape and taking place. So nothing is done by mistake. Everything is happening for a reason. Back to Fidelity, the third largest asset manager in the world, just launched their first stablecoin, not on Cardano, not on Binance, not on Solana, but on Ethereum. On Ethereum. And you follow where the liquidity goes. So if the largest asset manager, BlackRock, is already launched that money market fund, tokenized money market fund, and tokenized bonds like US Treasuries on Ethereum, obviously the second, third, fourth best are also going to do the same. If I may, if we look at here further, we saw UBS. They already doing their thing on Ethereum. We saw JP Morgan. They have that collateralized, tokenized collateral network also on Ethereum. Fidelity just launched today their stablecoin on Ethereum. BlackRock, they have their BUIDL token and they need on Ethereum, and all the tokenized assets that they're getting ready to tokenize is going to be launched on one blockchain. And that blockchain is called Ethereum. We see where we're headed with this. So what I want us to understand here, community, is that this same BIS, let's come here. This same BIS, we know what BIS is, the Bank of International Settlement. So this Bank of International Settlement, they're the ones that, as per July 1st, 2025, they reclassified gold to be a tier 1, meaning a high quality liquid asset. And that reclassification allows banks to count physical gold at 100% of its market value. And this is exactly what I want us to understand. So BIS, the Bank of International Settlements, they are the ones that literally took gold from tier 3, which meant that only 50% of your value of gold was recognized as your asset on your balance sheet. But now they took it to tier 1. And this same Bank of International Settlements community, they are the same ones that are literally, let's come right here. They are the same ones you see here, Bank of International Settlements. Bank of International Settlements. They're headquartered in Basel. They are the ones that call the shots. They are the ones that set the rules. When they set the rules, the world has to follow. This is the same bank that, as we speak, is actively exploring and testing the Ethereum blockchain and its ecosystem. They want to modernize the cross-border payments, tokenized assets, and central CBDCs as well. And what they want to do is they want to use Ethereum-based automated market makers, DEXs. For what? For the foreign exchange. The foreign exchange market is the largest market in the world with over $1 quadrillion. And they also want to explore tokenized money market funds. Is another extremely liquid asset. So this is why I want us to really, and there are more. So BIS initiatives utilizing Ethereum technologies, they have different projects Project Mariana, focusing on CBDCs, Project Rialto, focusing on Forex, and so on and so forth, right? So what we are talking about, community, is that this is not wishful thinking. And what BIS, once they're done testing it, and keep in mind they're in Switzerland, and we just saw that the bank, these three banks, UBS, led by UBS in Switzerland, they already did, they have a proof of concept, and they already conducted their public testing on the public Ethereum blockchain. Now, BIS is in Switzerland as well. They're doing now their own testing. And once their testing is done, guess what's going to happen? It's going to be the standard. They're going to put it as a standard. This is why we always talked about that the world is looking forward to a new monetary system, a new global reserve currency, one that is not based on a country, but is neutral, that every central bank can use to address the debt crisis, the global debt crisis that is going on. Right now, the only technology and blockchain, layer one blockchain, that meets the bill, that meets the requirements is Ethereum. It has a 100% proven track record, proof of concept, that it's reliable, it's secure, it's liquid, it has the most developers, it has the most stable coins, the most real-world assets. 65% of all tokenized assets right now live on Ethereum. And this without Clarity Bill yet. The Clarity Bill is not even here yet. All that is being pushed is Bitcoin. Bitcoin is being pushed so hard. And we saw who originated the foundational technology, the sharding 256. It's the Department of Defense, the US Department of Defense, so the US government. It's being pushed heavily. However, Ethereum, like we saw, they're not using that particular one. They're using a whole different technology. So community, this is what I want us to close out with. If we hear de-dollarization, all of that, let's not take it at its face value yet. What we need to understand is that we are at the very early stage. Actually, we are at the very same stage like we were back in the year 2000. But this time, it's not the internet. In 2025, 25 years later, we are at 7% of the global population owns or uses cryptocurrencies. We're at the very early stages, and there's only 560 million people. That's it. That's it. So less people right now are own or use cryptocurrency than back in the year 2000. It was 740 million that were using the internet. And here we are at the very early stages. And this technology is dominated by US-pegged stablecoins by 99%, by far. So when you hear all these de-dollarization talks, and we know that the future of finance is taking place on Ethereum, and Ethereum has the most stablecoins, and these stablecoins and real-world assets, they'll need to be paired with some fiat, tokenized fiat. And predominantly right now, that fiat is it's a US denominated. So, and we are at the very early stages right now, community, meaning that we have the largest opportunity to make the most out of this situation. And this is why we're going back to the fundamentals. A lot of liquidity is getting ready to be concentrated on one chain. Keep in mind, these are not my words. These are not my words. This is Larry Fink. Larry Fink is the co-chair of the World Economic Forum, and he's the CEO of BlackRock, the largest asset manager in the world. And he's talking about one common blockchain. One. All you need is one common blockchain. That's all he's talking about. And he's talking about the security of this blockchain and how tokenization is going to take place in one place under one common blockchain. That common blockchain, let's not deceive each other. That blockchain he's talking about is known as Ethereum. That's where everyone is building. Fidelity, the bank, Swiss Bank Association, even the Bank of International Settlement, even the Bank of International Settlements, the BIS itself chose Ethereum. So we know what's coming next, and they're the ones that set the rules. They are the ones that set the rules, that they are the ones that tell us what is a tier one high quality liquid asset. And here they are using the most one asset that is going to be the most liquid, and it's a technology at the same time, and it's yield bearing as well, and it's the modern oil. In the 70s, the most used commodity was oil, because with oil you needed to run the world, this industrial world. You need to use it. You can't, airplanes, so transportation needs it, production needs it, logistics needs it. You can't do nothing in this world without oil. And that's what was the US was pairing the US dollar with in the 70s for 50 years. Now the US is using an entire technology, not just one commodity like oil, but it's using an entire technology known as Ethereum, and is running 99% of the US pegged dollar, tokenized dollar on that. And many more tokenized assets and real world assets are getting ready to be launched on there. And the only asset, fiat currency, that is dominating and will be able to provide enough liquidity for all those tokenized assets is the US dollar. So when we hear de-dollarization and all of that, and we know that this is the new technology, the new era, the updating, upgrading of this new traditional financial system, we should know one thing for sure. Liquidity is coming, and it's coming on a concentrated blockchain. It will be under one blockchain, and this one blockchain is called Ethereum. And once it comes there, what we need to focus on is that we have an ecosystem, and we are part of an ecosystem that will retain that liquidity, that will ban the supply and be scarce, that will accumulate USDC distributions, and that will be using that volume efficiently. Volume and liquidity is coming. What are you going to do with that? Do you have an ecosystem that will retain that liquidity, that will ban the supply, that will have sustainable staking distributions for you, that will use the volume efficiently to be sustainable? This is what we need to ask ourselves. We need to position ourselves accordingly, because the writing is at the wall, and we are at the very same place that we were in the year 2000, 25 years ago, with less than 7% of internet adoption. Now there's exactly less than 7% of blockchain and cryptocurrency adoption. What are we going to do now with the knowledge that we know now? I will leave you with that, community. For now, I want to wish you a wonderful rest of your day. And I want to wish you a wonderful Thursday. And community, let's go and support. Tomorrow is Friday. Let's support our queens, Queen Jane and Queen Debbie, as they have their Friday events. Let's go show them love and support as well. And I also want to encourage us and remind us that today, every day, we have our Twitter events. Let's ensure that we engage with the tweets. Killer Whale Survivor Bull Run. Let's engage with them. Let's remain active. Let's bring awareness continuously as we are watching the world to put everything together, line everything up for us that will work for us, community. With that said, I want to wish you a wonderful rest of your Thursday. Till we meet again, community.